Hi, I'm Amanda with RCS Financial Planning. You already know that you can't fully fund your retirement or afford your child's college education by stashing cash in a savings account alone. Average interest rates on savings accounts today are 0.05%. It is nearly impossible to accumulate enough for your future goals unless you invest. So today, let's talk about the reasons why you are still hoarding cash and avoiding the markets. Reason number one, you're afraid. The Great Recession of 2008 was the most severe economic crisis in the US since the Great Depression. The stock market lost over half its value, families lost homes, and retirement plans were canceled. But view this and more recent market downturns in a historic context, and they are overshadowed by a long-term growth story. For example, the S&P 500 returned to pre-crash levels by 2012 and has continued its upward march through international tariff spats, 3 US presidential elections, and a global pandemic. Yes, market crises have happened, and they'll happen again. But when you take a long-term view of our history, these crises are just blips on a timeline. Reason number two, you don't know what you're doing. As intelligent people, we don't like to move forward with important decisions until we understand the consequences. So it's not surprising that you may sit out of financial markets simply because you are unfamiliar with them. The best antidote to your fear is knowledge. Seek out beginner personal finance and investment books at your local library or bookstore. Listening to the financial news doesn't count. News sources are in the business of clicks and views. They must sensationalize to survive. They have no incentive to provide you any historic context on the latest scary market headlines. Reason number three, you're just waiting for the right time. It may be tempting to delay getting started because you think current prices are too high. The problem with this is that when the market does take a dip, most people fear that prices will fall again, and so they keep waiting. The most basic tenets of good investing are buy low and sell high. But studies have shown that time and again, those who try to time the markets end up buying at or near market peaks based on a fear of missing out or greed, and then sell near market bottoms because they're afraid of losing money. If your investments are causing you emotional angst, you probably aren't doing it right. Many of the unfortunates who lost so much in 2009 did so because they were inappropriately invested for their goals and ill-prepared for a market crash. Do not make investing decisions based on an internet or TV personality. As economist Ken Youre has said, market pundits forecast, not because they know, but because they're asked. Not investing is not a strategy. Waiting for the right time is not a strategy. Quit waiting to begin. You don't have time for that. At RCS, we invest our clients in all relevant pieces of the market to capture those expected returns in the most risk-efficient and cost-effective way possible. Investing doesn't have to be complicated or scary. Just begin. You can't afford not to.